Hey everybody, welcome to today's session. In today's session, we're going to be doing something a little bit different than the everyday norms. So we are going to be back testing live, obviously. One specific pair for today, it will be Euro USD. We'll be back testing it for the past 3 months and see what we could have done better to trade in this low volume market, and also learn from our mistakes, learn from the way the market moves, so that next time we are in a low volume market as such, we can actually trade better and avoid the mistakes that maybe we did or we didn't know that would actually harm us. So with that being said, we're going to start back testing the past 3 months. But before we do that, we're going to be looking at, these are the stats for the past 3 months. For the past 3 months, the Euro USD pair, we had 13 trading opportunities. We had 13 trading opportunities. 4 of them hit SL, 3 went break even, and 6 of them we closed in profits. That giving us a total of 17.5 R in profits, obviously 0 break even, and negative 4 R in stop loss, with a net total of 13.5 R in profits. So that gives us a 69% win rate. So the win rate is good, but for instance, most of the trades that we took on August, we had only 3 trades in August. 2 of them were stop losses and 1 was break even. And August has been the worst month for us this amongst these 3 months. So we would have had a better winning rate, but we can't avoid the losses in the market. So yeah, we had 4 losses, 3 break evens, and 6 trades that we closed in profit. So it's not a bad win rate, but let's see what we can improve. Let's see if we could have taken other trades, and maybe if we could avoid these losses and improve on our trading. So we're going to start off. Obviously, as we know, the back test is always, so let me remove everything. As we know, we are going to do back testing for the past 3 months. So we are going to start as if we know nothing from the past 3 months. So we're going to do a bar replay. We're going to cut until the first right here, and then start trading as if these are the market conditions that we have right now. So this was the candle that closed in May. It was a solid bearish candlestick. So when you look at these candlestick characteristics here, or the chart characteristics, we will notice that prices were in a downtrend, right? Prices were in a downtrend. As we had a high, we had a low, we had a lower high, lower low, lower high, lower lows, and prices gave us this solid bearish engulfing candlestick. So this was an indication that prices have a high probability to keep on pushing lower, right? So I was considering, I believe, to be taking bearish trades in June with that candlestick closure. So if we threw in a Fibonacci in there, okay, the 0.5 didn't really match it. If we did the 0.6, it went above that. So the Fibonacci didn't even align with this, with any of this. So okay, we had that market structure. The bigger trend is that we understand prices have a high probability of pushing lower. So we might throw in a couple of additional analysis in here. So prices did break out of this structure. We had this as the market structure, the monthly market structure. So prices were rejected first, and then prices came back again, and then got rejected again. So obviously prices were in this kind of resistance structure from the monthly perspective. I would have been anticipating to see prices, push lower. Now, let's go on the lower time frames and see how these prices will actually play out. Okay, so here we are on the monthly perspective. So we can actually go on the weekly. Okay, so on the monthly, we see as if prices are having a very strong bearish momentum, but here on the weekly we can see the bearish momentum is kind of thinning, right? Because the previous week was actually closed with a doji, and if you look at the trend, prices had a low, prices had a high, higher low, higher high, and then prices are now looking as if they are having a low momentum, and they're trying to create a higher low. So the trend on the weekly is bullish, but on the monthly it was a clear bearish, right? So right now I wouldn't have taken a trade here, or I shouldn't have considered taking a trade here until I see what or which momentum actually wins this. Is it the bulls or the bears? Because currently it was actually a low volume market, right? Now let's see how it goes on the daily perspective. On the daily perspective, we had this trend line here, and thus market structure. So I will be anticipating a bearish continuation should prices break below these structures, or once they reach here, obviously I'll be looking for some kind of a bullish trade. So let's see how it plays out. Okay, so prices have just created this kind of a bullish momentum, bearish, an inside candle, and then another doji. That's 3 days in. Okay, so we have that. Prices are now pushing higher. Okay, the trend started pushing higher here. Okay, so let me do a quick bar replay again. So remember, this is from the daily perspective. From the weekly perspective, once we switch to the weekly perspective, we can see the bulls are actually the ones that are taking control, right? So that means prices came here, lost momentum, and then created that kind of a bullish candlestick. So that would have been an indication that prices are now turning bullish. So that means on the lower time frames, such as the daily, we should have been looking for some kind of a bullish or a bullish trade, right? So using our edge, obviously we would have been waiting to see some kind of a break of a market structure, which I believe somewhere here. So maybe if we look in the 4 hours. Okay, so let's zoom out. So should prices break above that, we should be looking for entry candlesticks. Obviously we do use a break and retest. So looks like prices are being rejected from there. Prices are trying to push higher. They've bounced off this structure here. Okay, they've broken above. Let me pause. You can see prices have broken above this structure here, came back, but have not yet closed below this bullish candlestick. So in your trading, when you're looking at possible trading opportunities based off the momentum, for instance, you see the structures now, and the bullish candlestick, that's the 8% of the position right here. So that means if you're looking to take buys, this bullish candlestick should be viable. If bearish candlesticks close below this bullish candlestick, that means the bears are now more momentum. What you can see here is the bears are trying to push lower. So this one tried to push lower, reject, they but then it was rejected. Look at how strong in this area that the bears aren't allowed to close bearish in here, right? So obviously, I would have been using this one as my confirmation candlestick. So I always use, in my analysis, I use my 4 hours for confirmations, and then I use the 1 hour for entries. So that means I already had my confirmation on that. I would have come to the 1 hour. Would have been below here, or should have been, because this is actually past data. I'm long. Where would I have been aiming for? Most of the times I always use my Fibonacci extension. So for instance, here on the 4 hours, the structure started here, gave us that, and then here. So my target would have been aiming at this one right here. So I think I would have forced it to be 3. So I would have been aiming for 1. I always exit at 1. For those that actually know how I trade, they actually know I exit at 1, because once prices reach at 1, they look for prices always retrace all the way back to 0.618 before extending all the way back to 1.618. So I always advise people to exit their trades at 1. So that means if we took our entry here, we always need to be break even once prices reach 1:1. So we would have been risking about 17 pips. So once prices reached somewhere here, okay, 18 pips, we should have been break even. So that means this is how it would have been playing out. If that was the entry candlestick, we should have been looking to go break even once prices reach here, and we should have been looking to exit the trade once it reaches there. And guys, if you want to take a trade and you're looking to take the trade and it doesn't give you a reasonable risk to reward, or once prices reach at 1, it doesn't give you a reasonable risk to reward, just exit. Like, don't take the trade, because if it doesn't give you a reasonable risk to reward ratio, it's not worth it. There'll always be multiple trading opportunities in the future. So this one right here should have been a good buy trade. So prices started going bearish and then closed bullish. So and by the way, did you see this candle started being bearish and then closed back here bullish? So some people actually always just are moved by emotions in the market. So when they see prices, they took a trade and then it starts going bearish, they panic and close the trade. Never be that person. Believe in your analysis. Plus, always wait for the candlestick to close and see where it has closed. So if you close this candle while it was bearish and then it closed bullish, I think you would have been looking at yourself funny, right? You would have been even angry with yourself, right? Because you actually just reacted out of what the market is doing. But you always need to wait and see how the candle closes. So right here, this candle closed bullish, so we would have still had hope like prices will keep on being bullish. They had a low momentum though. Crazy momentum kicked in. Crazy bullish momentum kicked in at around New York open. So prices were ranging here, obviously, because it was the pre-New York, not a lot of volume. But then when the New York kicked in, you can see the momentum kicking, right? That's the volume session in New York. Prices kicked in with a strong momentum. We would have been break even once prices reached here, and then we would be holding until prices reach somewhere there. Obviously, given the current momentum, I wouldn't have been worried if the prices will actually hit take profit. And then prices just sniped take profit, and looks like it might keep on being bullish. But we would have been exiting the market at 3R, or once prices reached at 1 here. So another way that I always manage my trades is that once prices reach 3R, I look at the market momentum. Does the market still have momentum? If the market has momentum, I can continue to hold that trade. But if it reaches 3R or 1 extension and the momentum is a little bit weak, I don't really take that trade. I don't really hold it. I'm just like, okay, I just made 3R. I need to close this trade. So that's how I always view it. In this particular scenario, I might have continued to hold, but let me see first. This trade was on Wednesday, 14th June. It looks like we didn't take this trade. So the trade that we took was on June 13th, and we closed it at 3R. At 4R, and then on 15th again we took another trade. So let's look at these 2 trades on 13th and 15th. So right now we are already on 14th. So let's look at 13th. Which trade did we take? So this trade, we didn't take it. I'm not sure why I didn't take this trade, because it was a beautiful trading opportunity. Everything aligned perfectly. Like, it was a beautiful opportunity. I don't know why I didn't take this trade. But obviously we did take a trade on June 13th. Let's see how it played out and see what we actually got from it. So let me look at the data here and see where we took the trade on June 13th. Okay, so I want us to continue, like, we are back testing, but we are also looking at the trades that we took, if we could have managed them better, or if we could have, I don't know, traded them better, if we will. So June 13th. So it was somewhere here. The trade that we took, the entry price was 1.7738. We are aiming for a very high target. Like, we are aiming for 1.8. It stops with about 74 level. while prices broke and retested this zone here, right? So prices broke above that, retested this. We used this bullish candlestick as our entry. Our stop loss was just below this entry candlestick. But what we didn't really anticipate was that prices, or what we didn't really, what we didn't really pay attention to was that prices were approaching a resistance point. As you can see here, there was a resistance point, but we still pulled the trigger. Now, it's very risky to take a trade or a back trade while there is a resistance point. So this was an aggressive trade. Yes, prices did break above the structure and gave us a retest, but still, this is where we are holding. So after taking this trade, it was very risky. We shouldn't have taken the trade. Obviously, the CX prices started to almost stopping us, but eventually it turned around and so we were break even, and then prices came back, and you can see here they actually just tapped our break even and then took off. So what can I learn from this trade here is that we were very aggressive in this trade. We shouldn't have taken the trade while it was here. We should have waited for this major structure to be broken, and then we would have gotten this beautiful trade here, which would have possibly given us 3 hours and even more than what we have been held. So I think the reason I didn't take this trade was because I was still holding this trade. Once I got stopped out, this other opportunity was presented. So you can see this previous trade was the one that ripped us out, and then the following candle was the entry candlestick for this scenario. So I think the reason I didn't take this trade was after I take a loss, is that after I take a loss, maybe if I take a loss in London, I'm not going to trade the rest of London. I'll just wait for New York and look for another trading opportunity. Sometimes we may miss trading opportunities like this one right here. I understand that. But here's the thing. In the market, there are multiple, like there's an abundance of opportunities in the market. So I don't believe, like we'll never find another trading opportunity. I know somewhere around the corner we'll find another trading opportunity. So I'm not even worried. That's the reason why even after losing this trading opportunity, we got another trading opportunity. Like with this one, it's happened on the 12th, we just took out on the 14th, and then this trading opportunity presented itself on the 15th. We missed it, obviously for obvious reasons. And then on the 14th, there was another saw this break and retest. After that, we actually This was our entry candlestick. You can see the stop loss is just below the entry right there. And then this trade actually just pumped in our direction. So obviously we would have been very easy with 1 hour. As I always say, in trading, your primary objective is to protect your capital. Making money is secondary. So once prices reached 1 hour, somewhere here, we went to break even, moving stops to break even, and then this trade here, we closed it fully once it reached 4 hours. So we exited at about 108.55, somewhere around 108. Somewhere here. So once prices reached 108.555, we actually just put the whole bunch and left profit. So we closed the trade fully at 4 hours without it reaching fully to take profit. So some of the reasons why when you're in the trade, as I was saying, once you take the trade, before you take the trade, you're risking. After you take the trade, you're trading. So that means you can see here, the reason I closed this trade is because prices are approaching this somewhere the resistance structure. So that means you had a possibility for prices to start reversing. Right? So all of that is true. Once prices reach a resistance, there's a possibility for prices to start reversing. And for us to maximize our earnings, we just need to close the profits at 3 hours. But here we already had 4 hours. So that means we are past our target. So I was like, okay, we already passed 3 hours. We have 4 hours in our hands. What's the reason for us to risk losing this beautiful move? So I was like, fully close the trade at 4 hours. Everybody close the trade, close the trade, close the trade. And we exited the trade at 4. But let's see how it kept on playing. Did it reach the target? So you can see it did kind of move momentum there. Okay, it didn't stop as well. It didn't stop as well. So if the person is holding and stops are still at break even, the person is still beating the trade. Beating the trade stop us for nearly to take profit. But you see the importance of having a trade. Like you are 4 hours about 1 hour. How is it trade? So only you need to pass that, and then you can see our prices are approaching some move. So even hold, so hold the target to our resistance. At the end of the day, proper trade management, we close in 4 hours while we still have time to move. This will actually be maintaining this risk in some of the trades, if you hold, after they reach a resistance like that, there is a very high possibility prices will just push all the way until break even and you will be stopped out. Crying. JJ, why are you crying? Stop playing, brother. So that's the reason proper trade management is always good and it's always key for your analysis, right? And plus, once prices retrace, you can always find another trading opportunity. Like for instance, here I see on the June of 15th, we actually took another trade, Euro USD. June 15th, we actually took another trade. So we took the trade on, okay, so this time we took it on the 15 minute. The entry was on the 15 minute. It was 1600 hours my time. So June 15th, 1600 hours. So prices, we have seen prices have broken above this structure. So I took advantage of this volume and actually took a trade here. June was beautiful. You can see all this volume. June was beautiful. So I took my buy with my stops somewhere here. I was aiming for 2 hours. I manage my trades different. I don't want to just keep on holding. Obviously, here you see it was the end of the London session. And let's see if it was actually aligning with any kind of structure back here. So I always look if it has any structure back there that's indicating we might be reversing. And then we had a low, and then we had a lower high. So that means the trend is kind of bearish right now. So if I was still holding this trade, I would have closed it once I see this break with change of character. But will the trend change back to bullish and hit take profit, or we need to keep on going lower and stop right here? So some things you just need to always consider. Okay, so you see some kind of bullish momentum. You just need to sometimes be considering the price trend and see how it's going out for you to actually maximize your gains and to know how price is going. So you see here it's indicated that it's even lower low. Looks like it's related to lower high again. So yeah, at this point, because this is just a range market and like for me, I don't like holding trades too long. Swing trading has very low profitability rate. So I just stopped doing that. I stopped being a swing trader and I'm focusing much more on day trading. So that means I'll have exited the trade way past all this drama. Federico, you're saying you want to ask something. Can I go down a bit? Can I go down a bit? I'm not sure I understand what you're referring to. actually unmute yourself because I think if texting will take much longer. You just unmute yourself so that you wanted to see if the trend was. So yeah, you can see here the trend actually will change. So prices created higher you can see here the momentum is bullish. Like prices are creating higher highs and higher lows. So obviously in a scenario or a market structure like this, what trading opportunities do you need to be looking for? Obviously buy trading opportunities because the trend is bullish. Why would you be looking for sell opportunities? It's buy trades only. Look at the sells. The sells are very choppy and they're not even really going very far. Look at this. Look at this. Look at these. These are the retreats, these are the selling opportunities, very choppy. So you can see when you trade against the trend, it's very hard for you to actually get to decent trades because of this way the market is always set up in the time. But if you trade with the trend, you can see how beautiful the push is up. Strong bullish push. So what we say is indicating some kind of a reversal so that we can actually look for a selling opportunity because prices have broken below this low. So let's see how it goes out. Back above. Oof. Prices are not pushing lower with a strong crazy momentum. So obviously, as I said above, you can see this in the So now the only structure that would have been holding these prices would have been somewhere here. I'd cover it like that. Looks like Okay, so the structure was somewhere here. That's the most recent structure. Prices broke above that. So currently we are now on July 14th. Prices look like they are very bullish. Crazy bullish. So if you look at the 4 hours here, back on this backtesting thing. So yeah, maybe I wouldn't take, that's why I think I didn't take the trade, because the daily was some kind of a doji. But if you look at the structure here, the structure was perfectly clear. Like prices were in the range, prices broke above, gave us a retest. So that means given us a so in a scenario like this, I think it's something to also learn from. So looking at the high obviously is important. Here we didn't take the daily. This daily trend, we had a low, we had a high, we had a higher low, we had a lower high. This being prices actually broke. See that? Prices actually broke above this standard trend. Like we had this high, we had this low, and then prices broke above the trend. So that should have been some kind of indication that prices have a probability to push high. I don't know why we missed that, but the trade would have still pushed and ended still here on this one. So it would have been a risky trade, but the prices would still be in the playing range of the next market structure, so we would have been safe. Obviously, so this trade was taking, we didn't take it, believing that this price was good. So we are smoothly, but we didn't take this trade. So that's something to learn from. We sometimes need to always just be focusing. You can see this trend, like prices broke above this trend beautifully, broke and gave us a retest with a beautiful confirmation, like beautiful. So the daily, we need to focus more on the trend rather than the candlestick formation, if you will. Like for instance, in this particular scenario, rejection there. So that means here we should be looking for the 4 hours to look for some kind of bearish retracement for prices to swing until it reaches somewhere here. So let's see how it goes up. When we get an opportunity. Okay, so that prices push lower into some bearish momentum and then close down. It is waiting for the still bearish. Look at this on the one. So for us to trade, we are anticipating to see prices retrace until they reach buys are somewhere here. So that's where we'll be anticipating to see prices go. But we won't be taking a trade until prices break below here, as that will have confirmed that the bears are now stronger than the bulls. Other than that, prices are just ranging. Okay, so that was a false out. Okay, Jesus, hold on. Okay, so we have a break. Ladies and gentlemen. So we have a break. So you see prices are now, they have reached our structure. They have reached our structure, ladies and gentlemen. So we're just, okay, hold on. So this bearish candle right here, we would have considered for it to make our or should have. Let me see, one of it. If we are going to trade. I don't think it will, because look at the time. The time is about 300 hours. So first, let us see. 1:18. Okay, let's zoom in and see if it actually gave us, or it will actually give us what we're anticipating. So we were risking about 6 pips. So that means once prices reach somewhere here, we should have been breaking. Okay, so we this trend line. Let's see if it will keep on being bullish or prices will reverse back, break below, and be bearish again. Because if they give us a bullish confirmation here, we're looking for buys. But if they break below here, we're continuing with sells. Oof, prices broke below. That's the 5. Maybe on the 15. Okay, so we didn't even have a retest here. So maybe if we get a retest here, then I may consider taking the trade. But before that, that would have been an impulsive entry. Okay, so we're looking at some kind of retest. We have a new market structure somewhere here. We don't have a structure there. Here we don't have a structure. So, okay, so this move looks like we couldn't have taken advantage of this. We didn't have taken advantage of it. It would have been an aggressive move. If we want to take advantage of this, this would have been an aggressive move. See this right here? This is just about the middle of the so this is so good. So this is the 1 hour again. So now the structure on the 1 hour is now this one right here. There are sales going to be made. We need to improve on something. We need to improve on something. Okay, so that's the daily. Okay, what can we do on the 4 hours that will actually... Okay, so let's remove these. So here we see prices were ranging. They did break below and then push back up, creating a lower low, and then this candle So I think this 4 hour here, this is what we should have been using as our confirmation, because the trend from the daily is indicating that the prices didn't have momentum. They are looking to push lower, so this is the confirmation for the daily. It's looking to push lower, right? And the momentum is bearish. So we have been able to sell it. That broke above that. If we extend it, obviously it's a weak structure, but does it give us? No, it doesn't. So we'll come back here. Because this is a sensitive zone. How is it expected? Here, respected here, prices broke, came back here, tried to reject, pushed back lower, gave us a retest. Okay, so this was the rejection at 1300 hours, but I wouldn't have taken the trade here because of this low. So right now, you remember last time again I said if you're an aggressive trader, this would have been your entry. So even for us, the breaking retest traders, this should have been our entry. The reason for that is because we already had a retest. We are just looking for more confirmation. You see, this prices came out and then broke below retest. See, this is the break and the retest. And then here, this was the extension. But we were not sure if prices will keep on pushing lower because prices were low. So that means this here right here was our retest, but this was our entry. So that means this should happen. So, are the one in control. So that means if we go in the lower time frames, the trend has changed and it has given us a confirmation. Like this here should have been a no-brainer, because we should have just taken the trade, because daily supports us, 4 hours supports us on the trade side, and then here we should have just been taking the entries, right? So this would have been, I wouldn't have considered it such as a breaking trade, but I would have considered it, this is a breaking trade, and this was just a confirmation. So that's how I like to check this. So once we have that daily confirmation, that daily perspective, that already supports how many pips would we have been risking? About 13. So that means once prices reach somewhere here, we should have been break even, weren't stopped out. Okay, so that means at about 3R, prices would still have that crazy momentum. I would have held the trade. Once it reached 4R, I would have been begging. So once it reached 4R, you can see here prices closed with some kind of a doji. I think I would have closed the trade because the doji all the time indicates there's a lack of momentum. So once the prices close with this doji here, just as the prices closed, I would have closed the trade because it indicates a lack of momentum. I wouldn't even stay in the trade. So I would have closed the trade at about 5. So that's how we should have taken advantage of this trade. Let's see how prices will play out here. Okay, prices close with a doji. Bullish, bearish, crazy. The momentum shift, you see that? So we had a low, we had a high, higher low, higher high. Now the trend is bullish, but the candlesticks are crazy bearish. Bullish again. So obviously this is a morning star. Price obviously oof, prices pushed past that like it's nothing. Okay, so kind of a range. Okay, so prices are now back bullish. Because this was the most recent high, prices passed that high, creating a higher high. So let's see. Prices came back down. Like, where are we now? We're in August. And August, look at this range. August has been the worst month. Since August began, 1st of August was here, prices started with a doji, and then look at that, prices creating a morning star, and then reversing, creating an even star, and then creating again some kind of I don't know what this is. This is a pin, right? So that means an inside candle and then a pin. Like it's giving you multiple signals. Here you have a monster. In the normal market, once you get a monster, prices are continuing. But then no, prices turn away, giving us an even star. After an even star, after that one happened, prices again became a pin, and then prices drop. But look at all of these weeks. So that means that the long time frames, these are not just trends. They are short term. So that means that very easy to get sold out. This characteristic of low holding given us an entry to take advantage of that. So that means if you want 4 hours, we need to have been looking for some kind of a sell opportunity. So that means this was the high. This was the low. We're looking for a break, retest, or possibly prices continuation in this area. This was the most recent low. Prices broke, gave us a retest. Okay, so that would have been our entry. Again, we didn't take advantage of this trade in our trading. So maybe we aim for 153. No, where's the target? The target was something. It would have given us 156. However, if you look at the structure, you can see prices on 16 hits, and then here we have 16 hits once they reach here, so that means we would have been breaking, and then prices reversed, so we would have been talking about breaking. So if you get a retest here, you might be looking for a confirmation until where you are actually going. Really get a retest. Prices have retested the structure, walk above it. So look at these falls down. Like, it's crazy how when prices go in the market like low volume, the way they react. Look at all these weeks. Like, what's this? Obviously, this was most probably fundamentally influenced, but it's crazy how they always have these crazy weeks. Yeah, definitely. This was fundamentally influenced. So prices are now again dancing here. very few people that will be working this last week of the summer. Very few, very small volume. So I don't know. I doubt if prices will actually trend before next month comes. But those are just my views. Those are just my views. So yeah. So that's the back test of Eurusd. Obviously, we didn't really get a lot of trades because I didn't really want to go into that much detail on the just so that we can actually save time. But what I've picked up is that I think we need to focus more on the daily time. Once it indicates a certain directional bias, once you know the long time frame such as the 4 hour to get a confirmation, the entries they should be really because you only have if you have bias that's confirmed in the daily every 4 hours, it's very unlikely that it will go against us if we get an entry on the lower time. So we need to always focus on the daily time frame, 4 hours for the bias on the daily confirmation of 4 hours, and then on the entry, if you take even aggressive entry, it's not so bad as long as it's confirmed on the daily and the 4 hours, because the higher time frames will push the lower time frames more times than the lower time frames will actually change against the higher time frames. So the odds in the long run will still be in our favor. That's something that I've picked up on our today's backtesting that we should improve on and will actually make us better and stronger traders in the future. That's the backtesting. Because last year I also had some crazy roundabouts. Like July last year I was over 20%. It was July. It was the most profitable month of the year. This year so far it's May. I missed the profits of double digits. I missed it. So hopefully next month we'll have another beautiful month. So yeah. We will judge you, don't worry. So with that being said, guys, thank you for your time. Thank you for showing up. Don't worry, David. I got it. Next tomorrow we'll be analyzing another pair. Now I'll try to this time I'll try to focus more on the daily to the long time so that we actually see what we can improve from there. See the numbers. Aspect of backtesting that actually helps us to become better traders. Where do we improve and how do we improve? And I'm glad that we actually caught that in today's backtest. So I appreciate your time. Thank you for joining me in today's backtest. I'll see you guys again tomorrow, same time, same place. All right, everybody. See you. Don't worry, Federico. See you guys.